Let's move on to a name that we all know very, very well, and that's Tesla. It got a long-awaited bullish call, actually. You can see the reaction in the stock today with shares up just around 4%. Now, Roth Capital's Craig Irwin upgraded the stock to a buy, adding to today's market gains. The price target was also $238 a share. Why? Well, he's saying that demand in China will be stronger than expected. Aikiko Fujita is back with me. And Aikiko, I mean, do you think China is going to be the key to Tesla's growth story? Because there's still so many questions out there just regarding its U.S. business and then also what's happening in Europe.
Yeah, it's interesting. It was just, a few weeks ago, a month ago, where we were talking about China being the big headwind for Tesla. And yet last week alone, we saw the stock up 10%. We're seeing gains further today on the eve of that annual shareholders meeting. There are two notes that came out today. You pointed to the first one there. Roth Capital Partners upgrading shares from neutral to buy on the case for China. Now, analyst Craig Irwin says he spoke with some of the top producers of electric vehicles over in China. And on the issue of overall demand, he says the top producers expect sales to hit 2 million instead of the 1.5 million informal target. So that would be significantly higher than the 1.25 million that was delivered last year. We're talking about electric vehicles as a whole. Now, based on that assessment, Roth expects Model 3 deliveries to hit at least 25,000 to 35,000 on the year. And if the market improves, Craig Irwin says the number could be double that. Now, one of the headwinds that could derail some of the gains, battery prices. Tesla has cited cell costs could come in around 100,000 to 150,000 per kilowatt, but Irwin says that number could be higher at 250,000 based on government data out of Japan, where Tesla makes up 80% of the lithium battery demand. There's another note that came out today that also added to the upside that we are seeing in the stock today. That coming from Bear analyst Ben Kallo, the longtime Tesla bull, made headlines back in April when he lowered the price target for the first time in many years. But today he reiterated a buy rating and a $340 price target. You see the significant upside there when you consider Tesla trading at $212.52 today. This on expectations of positive news coming from the annual meeting tomorrow. Kallo saying that he believes the sell-off in Tesla was overblown, adding that, quote, while it appears Model S and X demand has softened, we continue to believe Model 3 demand is underestimated. He goes on to say positive updates in recent weeks, including leaked emails and reports of strong deliveries, appear to have improved sentiment on demand, which we view positively. And we are seeing upside there in Tesla shares today after we saw it push even higher last week.
Aikiko, do you think it's fair to say just the fact that Tesla stock has been under so much pressure, hitting a 3-year low, that it was just so bad that it's worth buying right now? Is that the general consensus that you think you are hearing from the street?
Yeah, that seems to be the case that a lot of analysts are making. You look at the note from Baird saying that, look, it was already overblown, oversold. So now is the time to get in based on some of the data they are getting. I do think it's interesting that China is adding to the bull case there because there's still a lot of unknowns there. Questions about the factory over in Shanghai, how the tariff impact will unfold. Although a lot of people have said that they don't believe it's going to be as significant for Tesla. But there's still a lot of concerns about the demand on that front. We should point out, though, the numbers that are where the analyst calls are coming in isn't necessarily leading to sort of the positive sentiment within the company. There were some notes that came out, rankings, I should say, on these two job sites from LinkedIn as well as Glassdoor, where we saw the rankings of the company based on a survey from employees drop significantly. LinkedIn, Tesla fell from 5th to 16th in the annual top companies, and Glassdoor as well. We saw the ranking fall there, this on the back of some recent job cuts that have been announced as well.
All right, Aikiko, thanks so much.